most important concept of depreciation. Very important concept for CA Inter. Depreciation under Income Tax Act. Write the heading depreciation under section 32. You will never forget section 32 because section 32 is, you keep on telling again and again, section 32 depreciation. Depreciation. So you can write along with me 2 points, and later I will ask you to stop because I'll explain, then you can write, don't worry. Now you can write along with me. Guys, in depreciation there are two types. In the sense, as per Companies Act, what is the scene? And as per Income Tax Act, what do we have? As per Companies Act, in the 1956 law, it always used to be based on rate. They used to give the rate and you have to apply the rate and close it. This is in the 1956 law. From 2013 onwards, Companies Act, new act came, Companies Act 2013. There they started a concept of useful life. Useful life. 1956, normal rate. 2013, they came about with something called useful life. Means in the current Companies Act, against each asset, they have given useful life. 10 years, 20 years, 15 years. So you will divide the asset by 15, that will be the depreciation per year. Income Tax Act, till assessment year 87-88, way before all of us were born, there used to follow a method called single asset method, which I am going to explain now. Sir, why are you explaining old things? Because in order to understand a new thing, you have to understand what was there before. It is called single asset method. Single asset method. With example, we will explain. Single asset method. So what was there before and what has changed now is what I need to see. Single asset method. Let's see single asset method. Right? Single asset method. Let's take year number 1. I thought I'll ask you to stop, but I think you can write down, no problem, because it's easy, no problem. Year number 1. Write down, guys. 3 buildings are there. Building number A. Building. So when you are writing down, please try to understand and then write, because I am explaining along with it. 3 buildings are there. Building A, building B, building C. This is what method? Single asset method. This is it what is followed now? No, it is followed from 1987-88. From 97-98, 37-38 years ago, from there what is followed till now is something else, which I will do later with using this example only. Year number 1, let's say I bought an asset, guys. Cost of the asset bought. 3 different buildings I bought. 2 lakh, 2 lakh and 2 lakh. 3 different buildings I bought, all 2 lakh rupees. Year number 1, what asset did I buy suddenly this year? 2 lakh, 2 lakh, 2 lakh. 3 buildings I bought. Fair enough. Depreciation I have to charge at the end of the year. Depreciation, let's say at 10%. Single asset method. So in all the assets, 20,000 will go. 20,000, 20,000, 20,000. Cost minus depreciation. 2 lakh minus 20, 2 lakh minus 20, 2 lakh minus 20. Written down value at the end of year 1. Written down value at the end of year 1. How much? 1 lakh 80, 1 lakh 80, 1 lakh 80. No problem, same thing. Everybody understood this? Simple point. 3 different buildings were bought, all same. Just for argument's sake, we will make everything same, equal. Depreciation also 10% equal 20, 20, 20. At the end of the year, I have 3 assets with me, with the WDV being 1 lakh 80, 1 lakh 80, 1 lakh 80. So in year number 1, we had 3 buildings, 2 lakh each, depreciation 20,000. WDV at the end of the year, 1 lakh 80, 1 lakh 80 and 1 lakh 80. Everybody wrote this, all done? Next, year number 2 guys, write down next, year number 2. In year 2, something happened. What happened? I am going to sell building A. Building A is sold. Building A is sold. 2 scenarios we can give to understand. Building A in scenario number 1 is sold at 1,44,000 rupees. This is scenario number 1. Second scenario, it is sold for 1,96,000 rupees. This is scenario number 2. Building A is sold at 1,44,000 rupees, scenario number 1. Building A is sold for 1,96,000 rupees, scenario number 2. Now, so guys, what happens to asset number A, building B, building C? So building B, building B and C, any problem? No problem. It will continue the same. So here also 3 things, A, B and C. Building A, building B, building C. Here also building A, building B, building C. I just need to figure out each of these things. Building B and building C, absolutely no change. Next year, how will it be, guys? 1,80,000 normally. Less. What is the depreciation? 18,000, 10%. What is the final outcome? 1,62,000. A, I will come to that because A is already sold. Similarly, here 1,80,000. Minus 18,000 will give me 1,62,000. Here also same thing, 1,80,000 minus 18,000 give me 1,62,000. Here also 1,80,000 minus 18,000 give me 1,62,000. Here no change whatsoever, no change. Building number 1, what was the WDV at the end of year 1? 1,80,000. It is sold for how much? 1,44,000. Is it a profit or a loss? Loss. How much will the loss be? 1,80,000 minus 1,44,000. What's the loss? 36,000. So guys, in the first example, there will be a loss of 36,000. Single asset method. B and C will continue. A will remain the same. A will be a loss, 36,000. A is a loss, 36,000. Scenario 2. Scenario 2. 1,80,000 is what the asset was. It is sold for 1,96,000. Profit or loss? Profit. How much profit? Yes, correct. This is a 16,000 rupees profit. ₹16,000 profit. So I have 3 buildings. As of today, year 2, I have building number B, building number C right there. Building A gone. In scenario number 1, building A gone for loss of 36,000. In the second scenario, there is a profit of 16,000. My question to you is, in the tax P&L account, how will you treat this? It's a single asset method. Asset is gone. I've got some profit or loss. Will I debit or credit to my P&L account? Yes. So this 16,000 profit was credited to P&L account. This 16,000 profit was credited to P&L account. 16,000 profit was credited to P&L account as what? As balancing charge. $16,000 was credited to P&L account as balancing charge. That was the logic. What did they do? It was a balance amount profit, just one time thing, credited to P&L account and close it. So at the end of year 2, I had what? 1,62,000 worth of building number B, 1,62,000 worth of building number C, but suddenly there was one credit to P&L account. How much? 16,000. First scenario, 1,62,000, 1,62,000 remains the same, but there is a loss of 36,000. That loss of 36,000 is what? Is it depreciation which cannot be claimed now? Yes. Why? Because it is sold only at a loss. Asset only is sold. 1,44,000 it is sold, but it's the value and the book says 1,80,000. The 36,000 is something which I cannot claim depreciation in the future years. This year only I am debiting. This used to be, earlier, this used to be debited to P&L account as, one more concept, they used to call it terminal depreciation. They used to call it what? Terminal depreciation. Terminal depreciation means what? Depreciation which should have been claimed in the future years, but the asset only is not there. So this year only, everything I will put there only. Loss of 36,000 debited to P&L account. This was the treatment till 87-88. This was similar to exactly how Companies Act also treated their assets. But in 87-88 they thought this is pretty stupid for income tax purposes. Income tax should not have asset wise. Income tax, you should merge all the assets into one block. So they said, let me make 4 different types of assets, and each asset let me combine everything in a block. If there are building A, building B, building C, I will merge everything into one block called building. If there is vehicle 1, vehicle 2, vehicle 3, I will merge everything into one block called plant and machinery in that vehicles. If there are 5 factories, all the plant and machinery in the factories I will merge and make it one block called plant and machinery. If there is patent, trademark, copyright, different patents, different intellectual property rights, I am not going to do separate. I am merging everything and making one block called intellectual intangibles, basically intangibles. So a wonderful concept was born from assessment year 88-89, and that concept was called as block of asset concept. Block of asset concept. In that the lawmaker said, building merge. When I look at the taxation P&L account and taxation depreciation schedule, I should not even know which building. Everything should be mixed. In that building, you throw some building, add some building. I don't care, boss. You tell me your building value per SSC is how much. Company law used to do laptop 1, laptop 2, laptop 3, laptop 4. Like, why, bro? Add everything together. Tell me how much value of laptop do you have. In that one laptop, if you sell, I don't care. One laptop, if you add, I don't care. Ultimately, tell me the laptop value. Sir, a 50,000 rupees laptop I sold for 25,000. I don't care only. Tell me the block value is how much. In the block, how many laptops are there? 20 laptops. Good. In that one goes, one adds, I don't care. Tell me the final thing. Why should you do 20 different calculation? Do one calculation only. Mix everything. Merge everything. So they started with a concept called opening WDV. Opening written down value. Laptops all merged together. Opening written down value. So from 88, 89 what they did? Last year what all separate you have given, add everything. That's all. And write the opening WDV. It's called opening written down value. To that what you'll add? Sir, I bought new laptops today. Yes, add. What will you add? Actual cost of assets acquired during the year. Actual cost of assets acquired during the year. So in 87, 88, 89 they said all those buildings you add first. I mean, if it was there, good. But if you bought the building to this year only, add all those things. You added. Then less sale of assets, or if assets are destroyed, or if there is any scrap value, if you have received any insurance compensation. Sir, out of 20 laptops, one laptop I sold for 5,000. Subtract 5,000. Sir, one more laptop got destroyed, sir. No problem, throw it. Show it as 0. Scrap value some 500 rupees I got. Show 500 rupees. Basically, they made life easy rather than maintaining asset one after the other. Like this guy Rain gave me one hard disk now. There are some 3-4 hard disks. He has numbered it. So I have to maintain hard disk number 1, 2, 3, and for that depreciate. When did I buy this? Irritating. Just add everything. In that one hard disk got corrupted, gone. I had to throw it. So what will I do? Minus 0. That's it. Value will remain. Minus 0. Gone. One loss. One more I added. 10,000 rupees. Easiest. Easy concept. Block concept. No need to maintain separate like this. No need to maintain only separate. Mix everything. So sale, destroyed, scrap value, insurance compensation, all those things. Then after the subtracting this, what I will get is WDV at the end of the year. WDV at the end of the year. I will get, to that what you will subtract depreciation as per Income Tax Act. Depreciation as per Income Tax Act. WDV at the end of the year minus depreciation as per Income Tax Act. And what you will get here? You will get the opening WDV of next year or closing WDV after depreciation of that year. That's all. You will get closing WDV after depreciation of that year, or simply put opening WDV for next year. They made it very, very simple. They made it very, very simple, logical. No nonsense, no separate asset method, merge everything and close. Easiest as easy as possible. So if you see here, if I now combine that other example here, if I merge that example here, how will it look? You see, at the beginning, instead of 87, 88 only, if I change this, assume in 87, 88, single asset method was not there. I have changed it with this method. How will it look? You see, opening, so if I am taking the same example, opening WDV was nil only. During the beginning of the year, I did not have any asset. Year number 1. During the year, I bought 3 assets. 2 lakh plus 2 lakh plus 2 lakh. Did you agree? Yes, 2 lakh plus 2 lakh plus 2 lakh. I am just recreating the same thing using block concept. 2 lakh plus 2 lakh plus 2 lakh. I am talking about year number 1. Let me talk about year number, recreating year number 1. I am recreating year number 1. Opening WDV, nothing. During the year bought 2 lakh, 2 lakh, 2 lakh. Overall 6 lakh. Any sale during the year? Nil. That sale happened only in year 2. In year 1, any sale? Nil. What is WDV at the end of the year? 6 lakh. Instead of 20,000, 20,000, 20,000, I will give depreciation on full 6 lakh. How much? Same 60,000. 20, 20, 20, add means 60 only, no? What is the opening WDV at the end of the year? Instead of 1 lakh 80 plus 1 lakh 80 plus 1 lakh 80, I will merge everything. 5 lakh 40. 5 lakh 40. Till here everybody understood? Very simple. I hope you have written it down. Yes. So basically, year 1, opening WDV nil. I am recreating year number 1 using new logic. Merge all the buildings. I don't care. Any building say sold? No. Nil. What is the WDV at the end of the year before depreciation? 6 lakh. Depreciation rate for buildings 10%. 60,000. Overall same. 1 lakh 80 plus 1 lakh 80 plus 1 lakh 80 can be written as overall 6 lakh. Chapter close. This is year number 1. Now come to year number 2. Same. Scenario number 1, scenario number 2. What was scenario number 1? Asset in the block. What here? An asset in the block of building was sold at 1,44,000. An asset in the block building is sold at 1,44,000. One more, an asset in the block building is sold at 1,96,000. An asset in the block building is sold at 1,44,000. An asset in the block building is sold at 1,96,000. Same. Now using the same logic, we will write down. First one. Tell me guys, what's the opening WDV for year 2? Everybody, what is the opening WDV? Yes, opening WDV. 5,40,000 plus actual cost of assets acquired nil. Any asset acquired? No. Less sale. Tell me, what is the sale value? 1,44,000. It's acting funny. What is the sale value? 1 lakh. Write down 1,44,000. That's it. That's the sale value, 1,44,000. Now, the sale value is 1,44,000, guys. What will be the closing WDV? Tell me. Sale value 1,44,000. Closing WDV, how much? Just before depreciation, closing WDV 3,96,000. I am not charging depreciation, just before depreciation 3,96,000. 3,96,000. Let's stop here. Here you come. Opening WDV will be 5,40,000. Actual cost of assets acquired nil. Sale value 1,96,000. What is the closing WDV? The second case, how much it sold for, guys? 1,96,000. Yes or no? What is the closing WDV? 3,44,000. 3,44,000. I understand this is before depreciation. This is before depreciation. Tell me, in the old method, before the depreciation, ABC was there, A was already sold. What is the existing WDV before depreciation? Year number 2, depreciation is not yet done, but asset has been sold. Depreciation is not yet done. What is the value? 1,80,000 plus 1,80,000. Correct? 3,60,000 was there in old method. Everyone agrees? I am telling you before depreciation. Before depreciation, this asset was sold. What is left? 1,80,000 plus 1,80,000. How much is there? 3,60,000. So in the old method, 3,60,000 was there. Basically, difference is 36,000, which is obviously the loss. This difference is 16,000, which is obviously the profit. Correct? 36,000, which is the loss. 16,000, which is the profit. Yes or no, guys? Obviously. Normal mathematics. Old method 36,000, 3,60,000. Here it is 3,96,000. Here 16,000 profit, because WDV is what? 3,44,000, because I have subtracted 1,96,000. So my question to you is, the WDV compared to the old method, WDV is higher by 36,000 rupees in block method. WDV is higher by 36,000 in block method, as there is a loss. Guys, if I had to remove the asset at cost, how much would I have removed? 1,80,000. So when I subtract 1,80,000, WDV will become 3,60,000. But did I subtract 1,80,000? No, I subtracted 1,44,000. Why? Because the asset was sold at a loss. When the asset was sold at a loss, what will happen? WDV will increase. Yes or no? When the asset is sold at a loss, what will happen to WDV? Increase or decrease? Increase. So the WDV is higher by 36,000 in the block method, as there is a loss. If I want to remove it at cost, I would have removed 1,80,000. But I am removing lesser. When I am removing lesser, whatever is remaining is more. So as there is a loss. My dear friends, in the old method, in that year only, what did I do? Debit the P&L account by 36,000. That year only I debited the P&L account by 36,000. In the new method, I am not debiting anything by 36,000. The only effect that happens is the WDV increases by 36,000. And I will claim depreciation on that increased amount of 36,000. And every year, instead of debiting the P&L account by 36,000 in 1 year, That 36,000 will keep getting depreciated over the next few years. Are you understanding the difference? In the single asset method, that same amount is debited to P&L account, 36,000. In this method, the WDV is increased by 36,000. 3,60,000 has become 3,96,000, and I will charge depreciation on 3,96,000, which means that extra 36,000 is added to the asset, and it keeps on getting depreciated over many years. That's the beauty of block concept. In single asset method, the asset is no longer there. Direct attack. That here only, add debit P&L account and close it. Whereas in the, block method, the loss is lying where? The loss is lying in the WDV. And slowly it is getting depreciated over the next few years. Is the asset with you? No. But depreciation happens over how many years? Many years. Correct? Single asset method is new girlfriend, new boyfriend. Breakup happened, tomorrow you move on. Correct? Block asset is real love and breakup because you are still doing CA. Correct? You are in first BCom, you are in love. You are doing CA, she is doing first BCom. You are doing CA, second BCom. You are doing CA, third BCom. You are doing CA, she's got a job. You are doing CA, she's got job promotion. You are doing CA, she got married. You are doing CA, she got a child also. You are doing CA, that child is calling you uncle. Correct? Still, she is your first love. You will not forget. That is called depreciation block method. Is the asset with you? No. But what happens? Slowly every year you will try to forget some part of her. Yes or no? Yes. Block method. Chiller. Relate it to life. You will understand. Single asset method is what? Puppy love. Some crush will be there. No crush. Crush 1 or 2 days. Chapter close. That's it. After next day, new asset will come. Correct? Here it is real love. Correct? Because even though you have lost the asset, it is still within you. Oh, super. Yeah. And then you will depreciate on that 3,96,000. And every year some amount keeps on going. Some people have went into feelings already. Hey, come back. Right. Macha, my dove, all that. Come. 3,96,000. Right? Yes. So, but depreciate on that, keeps on going down. Ultimately it will be fully depreciated. Don't worry. Correct? Fully depreciate will happen, but over time. That is the beauty of block method. So the guy who introduced this, full love failure has happened for him. Guarantee. That's why he's introduced the block method. Right? Understood? So WDV is higher by what? 36,000 in the block method. As there is a loss. And this will be depreciated. How many years? This will be depreciated over time. This will be depreciated over time. Slowly they will depreciate every year some amount, it will keep on getting reduced and then it will close. Right? Yes. On the other hand, guys, see, if I remove it at cost 1,80,000, then no change. Old one, new one, no change. 3,60,000, 3,60,000. But there I separated it. Here I am adding everything. I am adding and I am subtracting the sale value. Instead of 1,80,000, I am subtracting how much? 1,44,000. Less amount is subtracted. More amount is there in WDV. And that exact amount is the loss only, 36,000. That will be depreciated over time. On the other hand, instead of subtracting 1,80,000, I am subtracting 1,96,000. Means what? More has been subtracted. When more has been subtracted, WDV will become less. In the old method, 16,000 was credited to P&L account. In the new method, the WDV reduced by 16,000 and you will claim less depreciation over the next few years. You will claim less depreciation over the next few years. Got it? So here, write down. Here what has happened, guys? Profit of 16,000. Profit of 16K has reduced the WDV by 16,000. As a result, a lower depreciation is claimed. As a result, a lower depreciation is claimed. As a result, a lower depreciation is claimed over the years. As a result, lower depreciation is claimed over the years. Got it? So, profit of 16,000 has reduced the WDV by 16,000. As a result, a lower depreciation is claimed over the years. Understood, guys? In the first method, spot death, 36,000 loss, that year only debit, move on. This is true love method, block asset method. Right? Asset will not be with you, but still you will depreciate it over time. Still you will depreciate it over time. If it is a loss, lesser amount is subtracted. So WDV becomes high. So you will keep on depreciating. If it is a profit, more amount is subtracted, and ultimately lesser depreciation is claimed than in the old method. Wonderful concept. Here the moment two assets enter into a block, they will lose their individuality. It will become a block. Many assets can go out of the block, many assets can come into the block. Block will always remain. When will the block not exist? When all the assets in the block are sold. I have 20 laptops. As long as I have one laptop at least, the block will exist. But if all laptops are sold, block will no longer be there. Or even if the assets are there, but the block value is nil, means what? 20 laptops were there, block value is 2 lakh. I sold 10 laptops for 4 lakh. What is the WDV? 2 lakh minus sale 4 lakh. So what will be the final WDV? Nil. I cannot show anything now. It cannot be minus. Assets must be positive always. It cannot be minus. So the beauty of block concept is, the moment you enter the block, your individual self is lost. When building A, building B, building C enters the block, there is no building A, no building B, no building C. Everything is block of buildings. You add A, you add B, you subtract C, I don't care. At the end of the day, at least one building must be there. And some value must be there. Only then it is called, on that you can claim depreciation. Did you understand this concept, guys, all of you? Old method, new method, 2 minutes, please go through. Please go through again. Very, very important. So from now, what will we follow? For Companies Act, follow this single asset method. For Income Tax Act, forget about single asset. Everything should be clubbed. There are only 4 blocks and many mini blocks. Main 4 things are what? Plant and machinery, building, furniture, intangibles. Chapter close. That's it. Plant and machinery, furniture and fittings, then your building, and what? Lastly, intangibles. But in plant and machinery, many things are there. What? Ship, motor vehicles, pollution control equipment, like that many things will be there. But ultimately only 4 blocks, 4 main blocks: furniture, building, plant and machinery, intangible asset. That's it. There ends the matter. So income tax has made it very, very simple. You will have lakhs of assets. Why will you maintain lakhs of schedules? Just maintain one. You club all the assets into one block. But plant and machinery has various sub blocks, like ships, all ships into one block, all motor vehicles into one block, all windmills into one block, all books and periodicals into one block. Mini block it's called. 4 main blocks, remaining mini blocks. That's it. So from there you can go ahead. Just like Bangalore, Jayanagar, first block, second block, third block, then third A, third B, third T, fourth T block and all is there. Like that, block and mini block. And only in Bangalore you have all these block system. People get confused. 5th A main road, next is not 6th only. There will be some 8th A main road. Only in Bangalore it happens like that. 5th cross, 6th cross, next will be 11th cross suddenly. Correct? That's what Bangalore is all about. So like that only here, you just maintain 4. You have to distribute all your assets into 4 parts. And in that, various mini blocks will come. Think about it earlier. For example, if a person like Mukesh Ambani has, I mean, just say he's an individual. Mukesh Ambani will have as an individual some 10 businesses. Earlier, he had to maintain business-wise separate assets. Now what he can do? He can take building of business A, building of business B, building of business C, building of business D and club everything together. Because block concept is SSE wise or business wise? SSE wise. Block concept SSE wise or business wise? SSE wise. Now, Ambani is a bad example because Ambani has different companies. Each company is an SSE. But assume you only, individual guys, you are an individual. You have an agarbatti business. You also run a hotel. Assume you are an individual, sole proprietor. You have agarbatti business. You also have a hotel. And you are also running a courier agency. Assume multiple businesses. Can you have? Yes. All of them sole proprietor. Plus you are also into construction. Now in the agarbatti division, that plant, you can merge it with idli machine. That is also plant and machinery. Because you have a hotel. And then you can also merge it with courier agency. Mein the printing stickers, you have a printer. You can merge everything into one block. Because it is not business wise, it is what? SSE wise. Otherwise, think about the problem. You have to open one different accounts. For each business, different accountant. Painful. Block concept is actually there to make things simple. So in one block you have your idli vending machine, your idli maker, you have your printing press, you have 3-4 other things, factory items, agarbatti factory, agarbatti, that main plant and machinery is there. Tomorrow you will add one more idli maker. What will you do? You will add it to the block. That's all. Then you will sell the old idli maker. You will subtract from the block. As long as there is at least one idli maker or one item there in that block will exist. Plus that block should have some value. Sir, I sold it at a profit. No problem. Reduce from the block. Don't create separate credit to P&L account, debit to P&L account. Not needed only. Sir, I sold it at a loss. No problem. Subtract from the block. If you sold it at a loss, WDV will be more. If you sold it at a profit, WDV will be less. Automatically depreciation will get adjusted over the years. Are you understanding, guys? Yes. Please read 2 minutes. Go through. Most important concept. Go through coolly. Try to understand the variations and differences, what happens in the old method, in the new method. Right. So that's the thing. So 1 lakh 80, 1 lakh 80 done, and all these things. Understood, guys? 36,000 terminal depreciation in the same year it is debited. Whereas in the other one, 16,000 rupees balancing charge, it is credited. On the other hand, in the block of asset concept, over the years it will be depreciated, and over the years less depreciation will be claimed to the tune of 16,000 rupees. So that is the wonderful concept of block. So with this you will have to understand how many types of blocks are there and all those things. So ultimately this is the block concept. You see, come back here. So in the module, check. So read now, you'll understand. Depreciation is the reduction in the usable value of fixed assets due to normal wear and tear or efflux of time. Efflux of time means as and when time passes, or obsolescence. Depreciation is an indirect non-cash expenditure. It is actually not incurred, but is statutorily provided to arrive at the correct profits. Is it required as per income tax? Yes. Is it required as per company law? Yes. Depreciation is mandatory. Depreciation under 32 is mandatory and therefore shall be allowed even if the assessee has not claimed depreciation in computing his total income. Computing his total income, yes, you need it. So we need to understand in this particular subchapter or in this concept, what are the conditions for claiming depreciation? What do you mean by class of assets? What are the rates of depreciation? Block of assets. How many blocks are there basically? I told you there are 4 main blocks. They are called class of assets. And in each class of assets there are mini blocks that we have to figure out. Then what is the method of depreciation? Either it is WDV or is it actually based on SLM? What are the types of depreciation? One, you have normal depreciation. Then you have additional depreciation. Then for power sector undertaking, there is a different depreciation. And then I told you 20 laptops are there for 2 lakh. 10 laptops are sold for 4 lakh. Now assets are remaining, but then block value has become nil. One more example, 20 laptops are there, 3 lakh. All 20 laptops are sold for 1 lakh. So 3 lakh minus 1 lakh, the value is still there 2 lakh, but assets are only not there. That is the last part. Sale of assets in a block. So all these concepts we have to figure out. First and foremost, write down conditions for claiming depreciation. So you are writing down here, first one, main conditions of depreciation. Conditions, important conditions, which you already know. Tell me, assessee must be the owner or tenant? Owner or tenant? What do you think? Owner or tenant? Owner. Most important thing, assessee must be owner. Assessee must be the owner. Assessee must be the owner. But guys, there is one exception already discussed. Even though you are not owner, you can claim depreciation. Which one? Deemed building. Exception, deemed building. In deemed building, are you the owner? No. Can you claim depreciation? Yes. So when I am talking about owner, my next question to you is, should you be registered owner or should you be beneficial owner? Sir, first of all, difference only I don't know. Registered owner or beneficial owner? Example I will give you. So you are the owner of the car. Let's say there are cars. Mr. Nitya. And one more, Mr. Ananda. Block of assets, Nityananda. Yes. Mr. Nitya is what? He is the owner. Owner of the car means what? He has given the money to buy the car. He has given money to buy the car to Mr. Ananda and said, you please, buy the car and run the business for me. But Nitya's one condition is, do not register the cars in my name. Because you are running the business. Tomorrow if any accident happens, I have to go run there. I cannot do it. I am giving you the money. All the benefits of the business should come to me. I'm giving you, take some cut, nice cut you take, but the remaining part you give it to me. I'm investing in you actually. Who has invested in the business? Mr. Nitya, by paying for the cars. Ultimately when I pay for the car, I only should be registered. No, but I will tell boss, you're running a car business now, hiring and leasing and displaying of cars from one place to another place, taxi business. I don't want to be involved if there's any accident. You only register in your name. So Mr. Ananda registers all the cars in his name as per the Motor Vehicles Act. As per the Motor Vehicles Act, who will register the name? Mr. Ananda. All the cars will be registered. He is the registered owner. Mr. Nitya, all the benefits of the business will go to whom? Mr. Nitya. This fellow is called as the beneficial owner. Ananda is called the registered owner. Now tell me, depreciation can be claimed by whom? As per Motor Vehicles Act, Ananda is the owner. But who gave the money and who owns the cars? In real life, because where will the benefits of the property go? To Mr. Nitya. But registration is in whose name? Mr. Ananda. You would have seen, no? It's a 15-year-old kid takes his father's BMW, goes and kills 5 people on the footpath. You would have read in the paper. Who will they jail? Father. Father was sitting at home, Netflix and chill. Police came. Your son has done this. Have you read the paper? So many times it has happened. Correct? So, the child, 15-year-old, 16-year-old kid does this, father goes to jail. This fellow, Nitya, knows it very carefully, because even if you're a major, whatever it is, ultimately I am the owner of if my name is there in Motor Vehicles Act, I am gone. So he'll say, boss, you run, you do everything, no problem, you are only the owner as per Motor Vehicles Act, but the money you give me, you take 40%, give me 60%, I am investing in the business. Happens. Now tell me, depreciation who can claim? 5 to 6 case laws were there on this. Different courts. Who is the owner? We don't know. Then they went and understood the intention of the law. Always and always the owner is a person where the benefits go to him. Otherwise, you are not an owner at all. Are you an owner? No. The benefits and the power should be there with you. Before Modi, who was the Prime Minister? Manmohan Singh. Was he really the Prime Minister? Right? If you have understood that, you will understand that he was just the Prime Minister by name. One of the most brilliant people India has ever seen, Dr. Manmohan Singh. But unfortunately, it was just a name given to him, that's it. But was he really the Prime Minister? No. It was being controlled by somebody else. Right? So what I am trying to tell is, same. Ananda is the owner as per Motor Vehicles Act, but who is the real owner? Mr. Nitya. So they have all the case laws, same decision. What is the decision? Who can claim depreciation? Beneficial owner or registered owner? Beneficial owner. Beneficial owner to claim depreciation. Always beneficial owner. Third case, understood guys? So all these cases, Mr. Nitya is just a beneficial owner, but he is the main owner as per Income Tax Act. It could be one more thing. You may own the car and you may lease the car to somebody. Mr. A owns the car. He may lease to Mr. B. Or he may own a car, plant and machinery, whatever. He will give it on lease to Mr. B. Lease. 10 years, 15 years, 20 years. You use the machine, you use the car and give it back to me. No, but later I'll say I may sell it off, but use it. Who can claim depreciation? Yes, as per Companies Act and as per accounting standards, different things are there. Do you have leases? Accounting for leases, do you have? Yes. Yeah, do you have it for your syllabus? Yes. You tell me what are that? There is something called finance lease, operating lease, all that you would have not yet done. Okay. Oh, Nehal ma'am will do it, so you will understand that time. So when there is lease, definitely it's very much part of your syllabus. I thought it was, obviously inter, everything will be there now. Yeah, final though you will study more in depth. Basics of that you will study in inter. Lease. So as per, what do you say, as per accounting standards, no different treatment. Some cases you will be treated as the owner, some cases the lessor only is the owner. Who is Mr. A called? Mr. A is called as the lessor. The person who is going to lease a property is called lessor. Mr. B, lassi and all don't, mango lassi, not lassi, lessee. Correct? Lessee. Correct? Mr. A is lessor, Mr. B is the lessee. Correct. So this guy, lessor, lessee, again, forget about Companies Act, forget about Ind AS. Don't argue with Nehal ma'am, she is correct in accounts. In tax, different treatment. In tax, always, as per IT Act, who can claim depreciation? Lessor. Lessor can claim depreciation. Sir, is it finance lease, operating, whatever kind of lease and whatever different accounting treatment, I don't care. Accounts is different, income tax is totally different. Who can claim depreciation? Lessor. Lessor can claim depreciation. Lassi will drink lassi, that's all. He can claim depreciation. Lessor can claim depreciation, not the lessee. So always it is the beneficial owner and always it is the lessor. One more concept. As per this you already know. Fixed assets over in accounting standards. In that one, depreciation will come there. Depreciation according to you, is it on, if it is ready to use or it should be put to use? Available for use or put to use? What do you think? I will buy one AC extra and keep it there. I will not use it only. As per company law books, will you provide for depreciation? 100% yes. Because depreciation is also given for a flux of time. As time passes, the asset will deteriorate. So will you have to provide for depreciation? Yes. So fourth one, I am trying to tell that depreciation as per accounts, it is always, as you rightly said, available for use, or also called ready to use. It is available for use or ready to use. Same example. I will buy one extra AC because I want to fit it somewhere else. I will keep it there side. Now you tell me. As per Companies Act, definitely I will provide for depreciation. As per Income Tax Act, yes or no? Answer is no. Income Tax Act depreciation is not when it is ready to use. Are you seeing the difference between income tax and accounts? Yes, these are the differences. Income Tax Act, It is always on put to use. Unless the AC is installed, and then unless you start using the AC, then, or rather if it's ready to be switched on, that's it. That is the day you can claim depreciation. It has to be put to use. In accounts, ready to use. Tax, put to use. Put to use. Put to use means what? Active usage. Active usage. I have to ensure that the asset is used on time. Active usage. Now one deadly doubt people asked the income tax department. See, for accounts, no tension. The moment you buy it, it's ready to use. Moment you buy, claim depreciation. No tension. But in IT, they are telling put to use. So, in all the main companies, there were lot of fire extinguishers. Everything installed for safety. In case any fire happens, I can use it. So, a company had bought 20 lakh rupees worth of fire extinguishers. Everywhere they had installed. Is it ready to use or put to use? Ready to use, available for use. As per company law, no tension. Everything you take depreciation. You take depreciation on that AC lying also, on that fire extinguisher, no problem. But in Income Tax Act, AC until it is installed, you cannot take it. Now this fire extinguisher, is it ready to use or put to use? Ready to use. So they had a doubt. They went and asked, sir, it is right there ready, sir. Only for emergency it will be used. But you are using put to use. So before claiming, should I spray everything and come? Neatly from one line, keep spray. Everywhere spray that fire extinguisher a little bit and say put to use. No. This was a very valid question asked to the department through a case law. Again, fire extinguisher. Then in one more case, they had one backup generator. The current is always required in the company. For example, our academy. Without current, we die. You need power. So we have a UPS. Now that UPS also may fail. I will buy a backup UPS. Like we have internet connection, 2 internet connections we have. One normal. If that fails, one more we have backup. Backup also fail means we cannot help it. So UPS we have only one. We can buy one more. That's called backup UPS. Current goes, UPS will switch on. That UPS also fails, backup UPS. Now backup UPS very rarely it will be used now. Internet also. I told them to cancel the second subscription. Why? If it goes, they'll correct it in one day. Why waste money? Should always try to save. Without simply usage, wasteful expenditure we should avoid. Even though it's 500 rupees per month, why should you waste that money? 6,000 rupees per annum. Right? You can give discount to student instead of spending that money actually. You should always look at cost control. You are learning costing, you learn all those things. Cost reduction, cost control. Right? So why? So I told them, disconnect that second one. I don't want. If this goes, let's see. That time we'll see. We are India, middle class. In the heart, we are always middle class only. Right? We should save. It's not my money. It's not somebody's money. Everybody's money we should save. So now tell me, if I have an additional UPS, like film and all, when they make film production, they have 3 UPS they have. You know, these big vans will come, generating electricity. That's all backup they would have kept. In case any power fails, that van will be switched on now. Now the question to you is, guys, in this case, emergency equipment like that, fire extinguisher, will you get depreciation or not? In Income Tax Act. Issue went to court. And the court will define what do you mean by put to use. They said put to use will be active use also, passive use also. Deadly. They came out with a new concept called passive usage. Passive usage are these things which are anytime it can be used and which are very much required for emergencies. Example, fire extinguisher. Second, generator. UPS, that is a spare. Extra AC if you keep down, that is not spare. Only it should be emergency. It should really be needed. Right? This AC extra if I keep also, you have to install it. It's a waste. That cannot be taken. I am talking about emergency things like fire extinguisher, generator spare, UPS spare, whatever, extra spare immediately. If anything happens to that, one more thing. Now this, will you get, guys? Will you get or not? Yes, you will get what? Depreciation. So depreciation is on active use as well as passive use. This passive usage is also deemed to be put to use. Passive usage is also deemed to be put to use. Correct? So your all these things are there. Now, should you use it in India or can you use it outside India? What do you think? I will open KSA at Dubai and have one generator there. I will not use it in India. Can I? Books are maintained here. Can I take it into account, block of asset? Same SSE. SSE is not changing. Same SSE. But one more asset is abroad. Can I take or not? Where have you seen it should be used in India? Nowhere. Usage can be in India also, outside India also. No questions asked. So next point. Usage in India, outside India. Doesn't matter, guys. Depreciation is charged SSE wise, not business wise, country wise, no. In India, outside India. In India as well as outside India. Let us say if we grow, if you guys spread our name and next time 300, 400 students come, this will not be available. Not be enough only. So eventually we will be bound to take one more floor or do something in this building. Let's say we take the full building. I hope that happens. Full building will take. Then you will come and tell, sir, you take class and all that, but we need a break. When we need a break, we also need some recreation. So I have one room where there is TT, Carom, chess. Will also be Gukesh and will also win Master Grand Slam. 14 crores will also win. Right? So I won't pay tax also. Nirmal aunty will be waiting. Right? So yes. So you will tell that. I'll say okay, fair enough. So we will construct a room only for the games. Carom board will be there, chess board will be there, TT table, just for fun. Whenever you have a break, half an hour, you go play, rejuvenate your mind and come back. That entire room, which all these items there, cost me 10 lakh rupees. My question to you is, will there be depreciation on that? Is it building? No. Is it furniture? No. Is it plant and machinery? No. Is it intangible? No. Is it active use? Am I using it for active use means what? Use for business. Guys, active use means not using the asset. Active use means using for business. Am I using it for business? No. I am just keeping it as a recreational tool for you. You may still continue that. You may still twist and turn my example and tell, sir, it's used for business only. No, sir, because ultimately students are business, you may tell. Okay, let me change the example and add more thing. You will say, sir, I want one meditation room. So I'll go down to Cult Fellows and say, bro, that meditation room you give me, I will pay you rent. That is mine now from today. For my students alone. So students will go there and meditate. Whenever they feel like why they took up CA, they'll go there and cry. They'll cry and they'll come back. So crying room. Correct? So that crying room I'll hire. You will go cry nicely and come up. Now the question here is that whatever I am paying that money there, I have constructed that room. Full crying smileys on the wall and all, so that you can cry nicely and come. So now that room there, my question to you is, can I claim depreciation? Saying it is passive use or active use, use for business. Whatever I am telling are all decided case laws. I am not even joking. There was a temple in one company. They constructed a temple by paying 10 lakh rupees. They claimed it as depreciation. They claimed it as plant and machinery. Imagine. Assessing officer said, "Are you mad?" And he said, "No. My employees go sit there in the temple, pray, get rejuvenated, and they come. So I am going, that's plant and machinery. It's going to help me in business." Went to the court, went to Supreme Court. What did Supreme Court say? You are right. That is plant and machinery. That is called passive use. It is not actively used for business, but it is used indirectly for business. I'm not even joking. In Japan, it is mandatory to have 4-day week. Monday, Tuesday, Wednesday, Thursday, chapter close. Friday, Saturday, Sunday, only for family. If you switch on the phone and take official call, you will be fined 10,000 rupees. I'm not joking. It's true. Here, Sunday, Monday, every day, call. Correct? Because Indians work hard. We slog a lot. Right? In Japan, strict. And in that 4 days also, I'm not joking. Every building, every office should have a room called the sleeping pod room. There are small pods everywhere for sleeping. And mandatory, afternoon 1 hour, employee has to go sleep and come. I am not even joking. Mandatory, you have to go sleep and come. There was one experiment in Japan. People left their keys open. Two-wheeler key like that, cycle key like that, car key like that. They just left it and went. Nobody stole it. Correct? Japan is a very complex country. Nobody steals anything. But one of the highest suicide rates in the world is in Japan. Very scary. It is a very different country. And the best part is government has provided one forest also to commit suicide. I swear there is a suicide forest in Japan. I am not joking. I am not making anything up. You can go check online. Right? So people go trekking and all and find one dead body hanging and all that. Crazy. So Japan is a very weird country. But they never steal. You know, the social experiment is there. Nobody steals anything there. And they, also for employees, sleeping pods are there. You have to sleep 1 hour. Mandatory. Now tell me guys, sleeping pod, is it plant and machinery? Yes. Because it is helping in the business. Deadly. All these are decided case laws in income tax. So now tell me, temple, etc., is it active use or passive use? Passive use. Is it helping in the business? Yes, in an indirect way it is helping. So tomorrow if I have a recreation room for you guys only should make us so big. We can't do anything. We will provide good quality. You should pass and tell it to 10 other fellows. You are anyway Bakra, 10 other Bakras, you should come. You should join. You should help them join our academy. Then it will grow. That time we can have one recreation floor only. Will cult fellows will throw them out. We'll occupy that floor. That is called recreation room for our fellows. That's all. Simple. So if you see, yes. Now can I take depreciation on that? 100% yes. Right? All those examples. So your homework for the day is to read which one? Page 7.7, 7.8. That's it. 2 pages. 7.7, 7. Everything that you have taught there is there in that. Revision. Read it at home. 7.7, 7.8. So PGBP is one of the most important chapters for your future also. And for the exams, obviously. Whatever I am doing is nothing out of syllabus. Everything has come in the exam. The more you understand the concept, easier it will be. Okay? Thank you so much guys. See you tomorrow. Bye. Take care. Bye.